Talking about flipping accounts, there are two basic ways by which you can flip your accounts. It's either by fundamental analysis or by technicals. Alright? I am not a fundamental trader, I am purely a technical trader. I'm going to be showing you my strategy in which I use to flip my account, which I called demand and supply flip zones. These zones are zones that price do respect almost all the time, if not 100, but at least 70% of all the time. Because in trading, nothing is 100% guaranteed. Okay, this strategy will generate you high win rates if you learn and practice. Without wasting much of your time, now let's go to the rate chart. Now, the criteria in flipping zone, in trading this flipping zone that I always talk about is one, you have to look for sweep of liquidity. Okay, that's the first thing that requires you to in order to anticipate for flipping. You can't just enter into a market that you want to flip your account. You will end up blowing it. You end up blowing it. These are, if you're not flipping your account through fundamental analysis, the best way to flip your account through technical analysis is this strategy that I'm about to teach you right now. There is no either strategy to use, but this so far has been tested and been proven. Okay? So right now, first thing you should look out for is your sweep of liquidity. That's the first thing, that's the first factor you should be looking out for when having in mind to flip your account. Two, the continuation of trend. What I mean by continuation of trend is after sweeping the liquidity, price to the continue moving with a very high momentum. That's what I mean by continuation of trend. With that high momentum, it will require is to either give us a break of structure or change of character or change of structure. Okay, that high momentum price move it will either give us a break of structure, which is BOS, or a change of character or a change of structure. You're making the same statement if you're choosing any of these. Another factor there is your inducement, then entry and exit. These are just simple key factors. If it's possible for you, you note it down. Just stick to this plan and trust me, you will be successful. I will advise you based on my own knowledge, though no matter what I do, I normally use my trading management in place. But if you know how to take risks, this strategy I'm about to teach you will surely guarantee you a massive income. So right now, what I mean by super liquidity now, let me go into a rough sketch. Now, this is price moving in a range. I'll call this circulation manipulation. Thus, price doesn't know where it's actually going to. This is what I call range. It's not moving up, it's not moving down. Okay. Now, this is the breakdown. Taking out all these highs, all these lows. There must be there must be so many stop losses below here. There must be so many stop losses placed below here. Okay, that is starting. There are more either retailers or let me say the newbies. As long as trading is concerned, there must be so many stop losses placed below there. So price came down there, took up the liquidity to go up, giving us this high momentum that you're talking about. As you can see now, as you can see, we have getting our sweep of liquidity. This is the sweep of liquidity I'm talking about. The sweep of liquidity. This actually means, let me say, for example, now, if we have a car and one of the most factors that require that car to move is having a fuel in it. Okay. One of the factors that requires price to move is the sweep of liquidity. There are factors that push price. One is fair value gap. Fair value gap actually push price quite all right. Fair value gap push price. One. Then another factor that push price is liquidity and the financial market. These are, to me, the top three factors that actually push the market. So if price tends to sweep out this liquidity, it has gotten enough strength, enough fuel to move. This liquidity that it takes give it the high momentum to move up, giving us an imbalance. There must be an imbalance here, fair value gap. If you call it imbalance, you're correct. If you call it fair value gap, you're correct. There must be a fair value gap here, giving us a break of structure or a break of structure, or you can call it a change of character. Anyone is possible. If this happens to be a downtrend, you should know that this is not a change of character. But if this is just a continuation to the uptrend, this is just a break of structure. This is just simple thing. Here should be either our change of character or break of structure. Now, make sure that there must be a fair value gap in the high momentum. Whenever price moves with a high momentum, it must leave a fair value gap. It must leave a fair value gap. Okay. Now this is our inducement. Our inducement. You can also call this illiquidity, but I don't want to because it might confuse you guys. I call this our inducement, whereby making many traders to see it as a support. Here now will not be a confusion that many traders will not tend to actually see that area as a support right here. They will not tend to see that area as a support, whereas it's not. That's what I mean by inducement. Okay. Now, giving us another. This is obviously a break of structure because now this is now obviously a break of structure. A confirmation that we are now in an uptrend. All right. This is now a pure confirmation that we are now in an uptrend. You might be asking yourself, where should I enter? Okay. There are so many. This will be serving as a support to many traders. Here, right here, this our inducement will be serving as a support to many traders. That's where the confusion comes in. Many traders will jump in here. One, here is the breakout. Let me show you. Here is obviously the breakout. Okay. Yes, it's obviously the breakout. And there's a support that is lying here. Many traders will be entering trade here. So many will be entering trade here without knowing that the way the momentum is or that's just right here. Where the momentum is just right here. That is where the momentum is. You have to trade smart in order to make it smart. Right here is where the momentum is. So many retail traders, scalpers, newbies will be entering their long here, maybe placing their support right below here. What price will do? Price will come back again to take them out. Like I said, whenever price sweep up liquidity, it tends to go higher. That is how price move. Whenever price is either price is going to either close a gap or going to sweep liquidity or continuation of trend. Then another factor that also move prices is the news, which you guys call fundamental analysis. Yes. Fundamental analysis is so powerful that it can spoil your technical analysis in just 2 minutes. 2 minutes is even too much. A minute is enough for fundamental analysis to give you the profit that you're looking for. That is why I respect it so much. Whenever I'm trading, I'm always looking out for fundamental analysis. Although I don't trade fundamentals, but to be on a safer side, I always tend to check if there is any incoming news that is going to obstruct or going to actually hinder me from making profits. Okay. So right now, this inducement now be serving us a support to so many traders whereby they'll be entering the long here because already the price has given us a change of character for here and a break of structure, which indicates that we are now in an uptrend. All right. So with their knowledge, they will be entering their long right here, which the place that called an inducement, forgetting that this is where the momentum started, forgetting that this is where the momentum kick off. Price will now come down, sweep all of them off, get into a flip zone. Price can never break this zone. I won't say never because it can actually, yes, it can, but it often respect it most of the time. Almost 70% of the time. I'm taking my time not to use 100 because in this field, nothing is 100% sure in trading. That's why I use the word. That's why I'm using this figure 70. Price respects flip zone almost all the time. In as long as this is a change of character, there is fair value gap right here. This is our inducement, a break of structure, giving us complete. These are all confluences that indicate that we are now in an uptrend. Okay, if price happens to break this low here, they'll say, so many things around together that so many things around see this place as a change of character. If price happens to break this low, if price happens to break this low, they'll not see that maybe price have changed character and enter for a sell. All right, and enter for a sell. Whereas price is just targeting the real momentum to close this gap between this low and this low. This low and this low. Price is just targeting to close these two gaps and then continue its move. That is just how trade moves. That is just simply how trend moves. All right. So simple. You don't need any indicator. You don't need any chart format or trend line or so whatever in order to make money. The biggest way to make money trading is to keep your chart simple. Understand price action, understand candlestick reactions. You will be profitable. Okay. Now, without this, let me now show you a real example. All right. Now, this is what I was teaching you guys all about. If you can, normally I don't actually leave my trade. Whenever, even when I took a loss, I do actually leave my course to know if I'm improving or if I'm going behind. As you can see, anyway, this is a story for another day. I did a video explaining how I actually got this trade, but for now, let us focus on what we have. Now, this is now where market was ranging. As you can see, market wasn't moving in any direction. This is market market keep ranging in within this area, and I was anticipating for something either market comes back here. Either market comes back here for me to go short because actually then we were this trend was in a downtrend. Quite all right. This trend was in a downtrend. Okay. When price was here, I have in mind that I was looking for opportunity to sell when price was actually here. Okay. So at the point when I noticed that price begin to sell down without any confirmation right here. Okay, when price started to sell down, I left it. I actually continue with my daily activities, and what I said was like, boom, this was not a change of character because, like I told you guys, this trend was in a downtrend. This trend was in a downtrend, and this was a very high momentum, leaving me a fair value gap between this is the candlestick, leaving me a fair value gap between this candlestick and this candlestick, this bearish candlestick and this. There's a gap between them. Okay. So right now, what I was looking for, honestly now, is for price to give me a momentum, like an inducement for me to go long. Now, as you can see, if you go to the lower time frame in this chart, you not discover that there is actually an inducement right here. You not discover that there's actually an inducement right here. Okay. This is my inducement. This is my confirmation that there was indeed an inducement. Okay, as you can see, and also that actually there will be so many liquidity to sweep off here if price happens to actually breaks this partially support, because I won't call this a support. All right. When price took this thing out, number one, as you can see, there's an order block here. Not just the change of character. There's also an order block here to indicate that actually, yes, this is my entry. If there is no other block here, for example, if it happens to be no other block here, quite all right, where I will be entering my trade is just right at this week. That's where I will enter my trade, just right at this week, if assuming that there is no other block right there. But since there is one, because actually that's where price normally used to take action from in other blocks. So I now took my trade there on the week of that bearish stick candle. Okay. Now this is my high. This is my high. My my high is always at the next point of interest. The next point of interest being this week. This is my next point of interest. Don't be greedy. Okay? Don't be greedy. And moreover, where you should place your stop loss is very, very important. Very, very important. Your stop loss should be at least a little bit above the low. A little bit above the low. All right? A little bit above the low. So such in case, if price happens to if price happens to tends to come down to this zone, you won't be taken out. That is why my stop loss was actually placed right below the low. You can see that. That is why my stop loss was actually placed below this low here. Quite all right. Now, if you can check, this 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 stop loss is actually 41 pips. This is where now you now apply your risk money management. 41 pips. If you're using, let me say, $100 to enter this trade, to me, how I manage my risks, I enter $100, but I'm willing to risk 25% of $100. I'm willing to risk 25% of $100. This is possible for crypto traders, but for forex traders, you can choose, you can make your risk through choosing your lot size. Okay. Then my leverage will be 10 times. Most times, maybe not like most times it's 20 times, but mostly. But on this trade, I took 10 times. Okay, 10 times, 10 times, and my stop loss happens to be right below this low, as you can see that. Now, this is where I actually hold on to. When price happens to come to my entry, what did it what price gave me? Price actually gave me a bullish engulfing chart pattern, a bullish engulfing candlestick pattern, a bullish engulfing candlestick pattern. As you can see, this is a bullish engulfing candlestick pattern. All right, which may, which will enter so many traders to enter their long right here, because this candlestick formation is actually a confirmation candlestick. All right, like example like hammer, bearish hammer, bullish hammer, engulfing candlesticks. These are doji. These are candlesticks confirmation that once you see them on your point of interest, you have to now enter the trade, right? So many traders will not can enter their trade there quite here, and price will also come down to take them out to continue its trend. This is just simply how manipulative price can be. Now coming back to our 1 hour. Reason why I love trading flip zones. Reason why I love trading flip zones. as you can see, price came back to break this high, a confirmation that we are still in an uptrend, a confirmation that we are still in an uptrend. You can see the the BOS, the break of structure. That's the break of structure right here. What the price did, price came down. There is an already existing other block that price left. The other block, let me take this out. Like I lose. Now the other block, when price after actually mitigate our entry, price left an other block. Like I told you guys, price always respects other blocks. Okay? Price do respect other blocks. Now, price came back. This is where you should put your massive entry. Put your massive entry. And like I told you, many sharp traders, many smart traders will enter for, will either put all in. Many smart traders will now enter for a buy right here. Many. This is a pure confirmation where you should enter for your buy. As you can see that many will enter for a buy right here, and which actually leads to giving us a very big momentum to the upside. This is how to flip your accounts. Don't wake up one day and decide to flip your account without having a trade plan, without having a, a setup plan. All right. With this thing, you can maximize your winning rate and minimize your losses. All traders lost. Me too, quite all right. I lost in trade, quite all right. But my winning is up to 70%, while my losses are just 30. So I can boldly call myself a profitable trader because that's what I am. All right. This is just simple. What I need you to do is just cool down, learn it, understand it, then you can now implement. Simple. Remember what I show you guys. What you should be looking out for is first and foremost is a sweep of liquidity. A sweep of liquidity. That's what you should be looking out for. A sweep of liquidity. That's first thing. Second thing is a continuation to the upside, which must actually leave a fair value gap, or you can call it an imbalance. Either way, you're correct. FVG, fair value gap, imbalance. These three words means the same. Last thing you should look out for is your inducement. Inducement serve as a fake support whereby so many retail traders, so many newbies, so many trading gurus will jump into a buy right there, not knowing that market is coming to take them off. That's what in that's the function of inducement. All right, that's the function of inducement because right there, market actually break a character. That market will actually give a break of structure, which actually requires that this is an inducement. Market will now come down to fill this gap between this low and this low to continue to the upside. That's where you now put your entry, and your exit should be at the next high. Don't be greedy. Don't be greedy. Market can actually be manipulative. Your next your take your TP should be at the next point of interest, which is the next high that price created before coming down to your entry. The higher price created before coming down to your entry should be your take profit. Price will always meet there. No matter how slow it is, it will meet there. All right. So that is just how it is. Very simple and very easy. All it requires for you is just your patience and the right strategy, which are sweep of liquidity, continuation of trade, break of structure or change of character, inducement, entry, and exit. That's just it. And while using this, my strategy, make sure that you are using your risk money management. It is very, very important. You can't throw it away. Risk money management is very, very important as for you to be a profitable trader. You have to manage your risks very well. Nothing is 100% sure in trading. Even this so-called trading strategy, this strategy that I teach you now, but have it in mind that it plays out 70% most of the time. This is why I'm out here teaching you guys. All right. Now, this is the end of it, and I hope that it will go a long way to actually give you a high return. Thank you. Now we have come to the end of today's episode, and I'm convinced that you actually learned a lot from it. Now, what I wanted to do for me is to, of course, like, comment, and subscribe so that this video can be recommended to those that actually need it, just like it was recommended to you. Okay? Before any of that, please apply proper risk management while trading. Nothing works 100% in trading. Nothing works 100% in this field. Whether you're a forex trader or you're a crypto trader, please do well to apply more proper risk management. That's one of the other factors that will turn you into a profitable trader in no time. All right, dream big, start small, and grow gradually. See you on my next video. Take care.